Welcome to the first ever Philman Roll-Up and Associates Market Update. It's the week of April 20th, 2020. Our team has worked over the last several months to prepare some data that we think will be useful to our clients as they examine their debt profile and their options, and also just get a general sense of how things are changing over time. We encourage you to reach out to any of us that are listed on the last slide. And if there's feedback you have and you want us to provide something in a different fashion, we encourage that. This is meant for all of you to use, and to the extent that we can make improvements, we're eager to do so. We plan to do this the first and third Monday of every month. We plan to do the 3 or 4 page PowerPoint slides that you all received, but then also do this video and audio recording where we break out each one of those graphs or charts on those slides that we prepared. So with that, I will get into the market update. On the first slide, we have the AAA MMD yield curve. AAA, the perfect credit. MMD is municipal market data, and then yield curve. And what we mean there is the yield curve is how are interest rates from anywhere from a 1-year to a 30-year maturity. And so we have all those data points in between there for each year. And what we've also now done is looked at it over time. And if you look at the red line, what we've detailed there is where the MMD yield curve was 5 years ago. And hopefully what you notice there is that is the steepest of those 3 lines. The 1-year maturity has a lot lower interest rate than the 30-year maturity. And while this looks steep compared to our other data points, this is probably a more traditional yield curve than what we've seen over the last few years. Now that tan or brown line, what that represents is the MMD yield curve 1 year ago. And that line was extremely flat. But now we've also detailed where the MMD yield curve was last Friday, and that's the green line. So that yield curve is still very flat, but not as flat as it was 1 year ago. And some of what you've seen over the last few weeks with the whole market disruption and a lot of financial news out there has caused that to shift a bit, where we're a little bit lower on the shorter term maturities than we were previously. On the next page, we're detailing 4 different data points at high, lows, and where they stand today. So we have the 5-year that was as low, the 5-year MMD, which is as low as 0.49 and went as high as 2.56, but currently rests at 0.87. Then to the right of that, you have the 10-year maturity, which went as low as 0.78, as high as 2.79, and currently at 1.07. So just take a moment to compare that 5-year and 10-year. So 10-year, double the amount of time as a 5-year. But the maximum yield in the 5-year is 2.56, whereas the maximum yield in the 10-year is only 2.79. And so you can see that is investors were not requiring, over the last year, investors have not required that much yield to go out quite a bit longer. Then you have the 30-year, which was at 1.38 and went as high as 3.37, and currently rests at 1.90. And then to the right of that, we have the 10-year Treasury. 10-year Treasury historically is very important for a lot of different interest rates out there, but specifically for municipalities, oftentimes there's a trend that municipalities and treasuries tend to track each other. That has not taken place over the last few weeks. The 10-year Treasury has been as low as 0.54, went as high as 2.60, and currently is at 0.65. So the Treasury has been very low, whereas municipalities or municipal interest rates have gone high. They have come back some, and I'll explain why some of that has taken place on the next slide. So on the next slide, what we're detailing here is the municipal market fund flows. So if you see green on this chart, what that represents is money flowing into the municipal market bond funds. If you see red, that means money is flowing out of the municipal bond funds. And to the far right, there's this giant red line you're probably noticing, and that has been money flowing out of municipal bond funds. And in the middle there, the middle of that chart, we have a smaller chart that shows the detail of that. And hopefully what you're seeing is on the 18th and 25th of March, money was really flowing out of the municipal bond funds. And that was when interest rates were going up for municipal bonds. And you saw treasuries really low at the time. So some of that money was invested in municipal bonds may have flowed into treasuries, may just be in checking accounts or any number of other things. But what's happening is moving out of municipal bond funds into other types of investments. We're hopeful that we'll start seeing some more green lines on here, but this is an important thing to watch. When I talk with you in 2 weeks, you really should focus on have we had a stop of those red lines? Now, while interest rates certainly have gone up, how does that compare historically? And what we've done is try to show that here. We go back to 1998. And before we do that, though, on the 9th of April, what we're showing there is that MMD line. And we show with a dot and a line how that's changed over time. And then to the bottom there, we show the MMD, the percentage of time that rates have been lower for each one of those maturities than they are today. And so years 1 through 3, we have low rates. You can see that with the percentages ranging between 40% and 30%, but not extremely low, just low. And then if you get to years 4 through 6, now we're getting to the point of being very low. But then finally, you go years 7 through 30, and less than 2% of the time have rates been as low as they are today for each one of those maturities. So I would characterize that as extremely low. So while there's been a lot of changes in interest rates, and they have gone up, we are at a point historically where they're still considered very low. On the next page, what we show is the data that's you're likely to see over the next week. And we have new and existing home sales. We have durable goods. We have a Fed interest rate decision and GDP all happening this week. So these are things to monitor. And depending on how these come in, will help indicate where interest rates will be moving going forward. So I know we've only had a few minutes here, but we've listed the Fill and Roll app registered municipal advisors in this last page. I encourage you to reach out to any one of them to discuss your specific situation or get more details or just updates before I meet with you again on the first Monday in May. Thank you for your time. We appreciate any of your feedback you have, and I look forward to talking with you soon.